All right, everybody. I think we got this thing to work now. So what you guys are going to see right now is the Benzinga options school. It's basically a quick demo that I'm going to show you. It's like a sneak peek. Take a look at it so that you can see what it is, how the classes are. But today we have chapter 1, which is introduction to options. So let's go ahead and get this thing going here for you guys.
Volatility than the implied volatility. That means that realized volatility today is probably going to be elevated above implied. So VIX is saying 2% and options is saying about 1.5%. I think VIX is much more accurate on this one. So yeah, the move down to 380 in early market and pre-market is both good and bad. And so I'll explain, there's some good and there's some bad in this. So many traders have been long puts or long VIX calls heading into last week. You know, a lot of traders are positioned very similar to where we were. Most of these options, were just simply bleeding out deltas over time because they were going, they weren't really going anywhere. But Thursday and Friday really energized them. So a lot of these options have become one delta trades and really kicked the VIX term structure into heavy backwardation. Like VIX right now is backwards. It's flat to slightly elevated, and SPYs is definitely backwardation right now, right? So we're in this situation where there's now a lot of one delta puts in the market and one delta calls on VIX right now. And so any traders who, for whatever reason, did not buy protection last week, they're paying up right now for it. Trust me, they're buying it and they're paying up heavily. So because VIX is, 34 and it was at 25, last week. So they're paying a much bigger price right now. We'll talk about VIX in a second, but this also means that Tuesday is unlikely to see a rally. Why is that? Because the VIX has escalated so high, that means that the short-term options are of serious value, and traders are most likely now, with the term structure being like flat, means that the short-term IV is pretty much where the next month IV is, or the next strike IV is. So traders most likely have bought VIX protection through the FOMC. Our options that are expiring this Wednesday do not cover risk through the FOMC. They just cover risk up to the FOMC. But traders are likely buying beyond today's FOMC in light of Thursday, Friday, and today's price action. So that means that when we see a bunch of options come off the board that are one delta calls and VIX, it's not going to change things a whole lot in terms of dealer hedging, because traders yesterday, on Friday, and today have bought more VIX calls going through past the FOMC. So with that being said, we don't expect Wednesday to see kind of a little bit of a snapback, which sometimes happens on VIX OPEX. Like sometimes during a VIX OPEX, in the morning, you get a little bit of a snapback. We do not anticipate that's going to happen now. So we feel like now this really shifts expectations to Wednesday after the FOMC or Friday. It just kicks the can down the road, so to say. So with that being said, we feel like if we have a very benign or mild FOMC, then we think traders, will start saying, okay, we're not too worried. Like we can adjust forward guidance expectations, and we'd see a little bit of a rally on Wednesday. But if they stay hawkish, traders are going to want to stay long puts through Friday. That means that a lot of these puts, and keep in mind, a lot of these puts were way back in like the 400, 410 area, even 390. So every one of those puts from 410 to 390 is a one delta put, which means that even if they have to hold it to Friday, eating theta decay, they're still accumulating massive amounts of profits on these things. And they're going to have intrinsic value at expiry. So that means that it's unlikely if we get a hawkish Fed, it's unlikely that we get a snapback rally Wednesday and Thursday and Friday, because traders have options that are worth a lot of money. They're going to hold it for as long as they can on Friday. Then they're going to close out a bunch of options. And then Monday, we should see a little bit of an adjustment. Keep in mind, any snapback rally we expect from a fair amount of these option flows coming out of the market on Friday. So any snapback rally that happens on Monday, We do not expect it to last that long. We do not expect it to last that long. So with that being said, that would give us just another opportunity to sell. For right now, we think 370 is probably the downside. Like that, I would say is probably the floor going through today. I don't know about tomorrow, but for today, I think 370 is probably the lows on the day. That would equate to like a 2.5% move, which is like 2 standard deviations. So levels we have to watch on resistance, 390, 400, 410. You notice how the levels expanded, they got further apart. That's because there's not much interest in between. So this expands levels to the upside. That means there's less and less support. And then 375, 370, 365. Markets are closed next Monday? Wait, what? What the hell? Are you sure about that? All holidays, US 2022. Juneteenth. Okay. Wow, that's going to make things very interesting. I did not know about that one. God, I'm still so bad with US holidays. Okay, that's going to change. That's going to change things a bit. Then that means that the snapback rally, huh? Let me check. Yeah, yeah, they are. Yeah, Juneteenth. Okay, well then that's going to create. Then that's going to delay it until Tuesday. So interesting. Okay. So then yeah, Tuesday. So that's gonna change things a little bit. That's gonna change things. Okay, I have to digest it a little bit. Does moving it forward to Tuesday adjust things that much? I'll have to think about that. But for right now, this is where we're at for today. So any questions on this? Give me a 10 in the chat. Give me a 10 in the chat if there's no questions. Give me 5 in the chat if there is. If there is, post your question. Will that change it a whole lot? I'm trying to see what scenarios that would change it. For people who want to sell volatility, maybe. Yeah, we'll have to think about that. I'm not sure it's going to change it too much. Okay, sweet. All right, so let's go over SPYs. If for those of you that were watching the 5-minute chart, you should have noticed a nice PBO this morning. Very clear PBO. So what's the structure been? Impulsive corrective, impulsive corrective, impulsive corrective for a while. So you should be looking for moves in the same direction. And there we go. And a PBO and breakout. So there's, if you were trading that, should have been 4 points. About 4 points. Y'all see the PBO here? Should be pretty clear. 1 touch, 2 touch, 3 touch. Same highs, lower highs. Now the dynamic support and resistance is hedging, or it's hemming it in. Squeezing, squeezing, squeezing. Boom, breakout. So hopefully you guys are watching that this morning. It's a very, very clear PBO. Very, very clear PBO. I was in my morning meditation practice, but yeah, hopefully you guys were able to spot some of that. So a 2% move, which is what VIX is forecasting, would put us, yeah, very close to 370. Yeah, so I think 370 is your downside. Like that would be the max downside on the day. That would be the max downside on the day. Yeah. Yeah. Rodrigo, good to see you. Hope you're well. You know, 1 second, just checking in. All right. So, yeah. So hopefully you guys were able to take advantage of the breakout setup in SPYs. Q is also forming something like that. We expect that max move on the day would put us at 370. So again, VIX forecast is down to 370. Our VIX forecast is 2%. So VIX forecast for the day is saying basically we should move to about 372. I think at 370 would be your max move on the day. There's a fair amount of open interest at 370. So the way the open interest is kind of lining up is like this. So at 370, 380 is our biggest strike right now in terms of gamma. But that was going into today. And then 370 is the second. So it's like about 80% of that. There's some at 375. It's about half. So seeing a little bit of stoppage today, which we talked about in this right here. What did we say? We said 375 is the first support level. 370. I don't think we hit 365. That would be pretty impressive. Like we would need like an additional catalyst to get there, because 365 would be like over 3.5%, maybe 4%. Yeah, that would be close to that. And that would be an extreme move. That would be like well over that would be well over a 2 standard deviation move. That would be a huge move. So I think there's less than 5% chance. Less than 5% chance we hit 365 today. Like we would need some like forced liquidations or something like that to get there. So we've hit the first support level that we mentioned on the day, getting a little bit of a bounce. But right now, this thing has been hemmed in by the dynamic support and resistance, the 9 EMA, since pretty much the open. So when I look at that, I feel like first off, it needs to clear this. If it does, then it's going to have the 20 and then even VWAP. I think at VWAP, we'd probably see some sellers come back in. So that's kind of what I'm looking at on the short-term price section. 370 should be floor today. Watch for pullbacks to VWAP as potential selling opportunities. If it does happen to get up to 380, then I think that's an even better sell. Would I want to sell a bear call spread going into the FOMC? I'm open to it because volatility is elevated right now. VIX is at 34. IV is really high. Like what's IV on SPYs right now? So SPY IV is pretty elevated. Yeah, I mean 60% is huge. If Friday's options were at 60%, we'd be seeing 3% moves like daily. If you have the Friday's expiry on a Monday at a 60% IV, then you'd be expecting 3% moves. That's generally how the math works out. So this is exceptionally high, but it's today. So remember, time and volatility trend is 0. So today it won't be worth that much. This right here has definitely come down. So what we're seeing in the term structure for the week is we have an IV of say 60%, then we have an IV of Wednesday at 48%, and then the IV for Friday's at the money is 43%. So basically what we're seeing is backwardation on SPYs. VIX is probably close to that right now. VIX term structure going in today was flat, which means backwardation, but let's take a look. Let's see, 234%, which is high. And what's the next week? 163. Yeah, okay. And then 123. So yeah, we're seeing backwardation both in VIX and SPYs. So short-term volatility is going to be elevated right now. Yeah. Yeah. So would I consider selling a call spread? Maybe on a rally up to 380. Maybe I'd sell a call spread for Wednesday or something like that, like a post FOMC play, but not right now. I wouldn't want to sell it right now. I'd probably sell like a 380, 385, but not right now. We need to wait. We need to wait and see how today's price action manifests. Okay, so this candle is clearing the 9. It should start testing the 20. If it clears that, then it should get to VWAP, which is where I would expect sellers to come back in on the current move. So any questions on SPY analysis? We have our playbook for today. Any questions on SPY analysis going forward? Give me a 10 in the chat if there's no questions on SPYs. Give me a 5 in the chat if there is. And if there is, post your question. Futures is saying, so it looks like you include pre-market moves in determining structure. Yes, absolutely. Absolutely. Yeah, why wouldn't we? Why wouldn't we include that? Like there's flows. This, you got to understand pre-market is mostly institutional flows or traders adjusting expectations ahead of the open. So yes, absolutely. Yeah. Okay, sweet. So looking at VIX, as y'all know, we have our VIX trade. That's our best trade right now is this VIX trade. Our energy plays are getting killed today, but our VIX trade is just a monster right now. So the VIX is, this I actually think has one of those overshoots. So somebody asks to say, hey, when does the P&L in the daily chart, which is the purple line, when does that have an overshoot of the P&L at expiry? Well, we're getting one right now. So what did I say was the situation that would happen? You either have a really extreme move above your upper call strike early on, or you have a big jump in IV. And what we had was a big jump in IV. So we bought the 24.27 a week ago, and that showed to be very prescient. That was a way for us to buy insurance against SPYs coming down. So we got long volatility ahead of time. We bought that last week, anticipating VIX would rise. VIX did, and now VIX is right here. So we're pretty much at max profit on this one here. And so right now the market is saying that we have like a 90, we have a 90%. Yeah, the VIX is, right now the market's saying 95% chance, 96% chance we walk away with max profit on this. But the thing is, the purple line right now is 1894 and the max profit is 2000. So I think I'm going to let this run for a little bit more today. I think as soon as the max profit gets to like 1950 or something like that, which is only $50 short of our max profit, then I'll just close it out. So that's the VIX right now. But VIX right now, I think would probably should start stalling between, I think VIX starts stalling between 35 and 36 on the day. So I think VIX, going in, it's a horrible straight line. Who taught me? There we go. I think VIX starts stalling between 35 and 36 on the day. I think the only way we get to 37.50 is if SPYs collapses down to 370, and it'd have to do it pretty fast because SPYs is rallying a little bit. That's going to put some pressure on VIX. But if then SPYs were to collapse down to 370, then I think we could make it to 37. But that's, I think those are your highs on the day. So going into today, or going into Friday, the largest concentration of calls was between 30 and 32. But traders have adjusted their forward expectations with SPYs selling off. So right now, if we look at the flows on VIX, let's take a look. So traders are kind of actually mixed on it right now. They're selling a little bit of calls and then they're buying some puts. So if we look at the 15th expiry, we can see quite a lot of volume at the 35 strike, but then the volume tapers off dramatically above that. Like it's 1/5. And then, yeah, you get a little bit here, but then it just falls off a cliff. So I look at this as, at least for today, I think 35 is pretty close to your max move on the day. There's a lot of open interest there. There's a lot of open interest at 35. But again, look at the open interest at 37.5. It goes down by 1/6, or it goes down by like 75, 80%. So at this point, I feel like probably 35 is your max move. If we're lucky, we make it to 37.5. No chance, like almost no chance of making it to 40 today. Almost no chance. We would have to see some serious liquidation to make it to 40. So with that being said, VIX is probably going to start topping out soon at 35. Yeah. Any questions on that? Give me a 10 in the chat if there's no questions on VIX. Give me a 5 in the chat if there is. And if there is, post your question. Jordan says, is there a price point where you would consider getting short vol? Going into FOMC, probably maybe 40, but keep in mind that I would only do it via fixed risk option play. I wouldn't do a single leg. We have an FOMC event coming up. So with the FOMC event coming up, there's a lot of risk. And that event risk is really hard to quantify or estimate how they work out. Could the Fed come out more hawkish than expected? And could that create a spike in volatility? Yeah. So I would only do it via fix. But the first I would probably consider would probably be 40. But even then, I wouldn't consider really shorting VIX until after the FOMC, not before. There's just too much event risk going on. So with that being said, I would expect until after the FOMC. Yeah. Holding Aces says, when will we close the VIX trade again? About another $50 in profit. VIX would have to go a little bit higher for us to do that. So right now we're at about 1,900 in profit on this trade. It's actually pushed us to 2,000. So that is technically max risk or max profit. So let's see if we can get the fill. So what did we pay? We paid 8.3 for these 5.3. So we paid $3. We paid $3. And okay. Yeah, we paid $3. And right now they are worth, yeah, should be worth about 5. And now it's back to 1,900. So we could set a limit order for the day on this if we want to. See if we can get to 295. So $3 would be, we paid $3. Wait, let me double check this. We didn't pay 3. We paid 2.9. We paid 2.9. And right now at $3 is 2,000. So let's see if we can get this. Let's see if we can get the, let's see if we can get our max risk, close it out now. Or max profit and close it out now. Okay, we got fill for max profit. So close it out for 3. We paid 3 and close it out for 3 credit, which means 6 total. So let's fill that out in the chat. Let's update this. Close VIX bull call spread for is total 6 credit, originally paid 3, so $3 profit or 100% ROI. Okay, sweet. Technically it's a little bit more than 100 because we paid 2.9. So what is that? What is 2.9 divided by 3.0? Sorry, it should be what? 3 divided by 2.9? So 103%. We get 103% ROI on that. Okay. All right, sweet. Well, let me do it. There we go. Okay, so there's your answer, Holding Aces. We closed it. We're done with that. Any questions on the VIX trade before we move on? Okay. Let's cover Qs. Qs is kind of in a similar situation to SPYs. It also had that PBO set up early market around 279, so you could have got 3 points on that. Right now with Qs has its largest open interest is on the put side is 300, but then the next one is 280. Like 280 and 290 are almost identical in terms of put open interest, like almost identical. So I think pullbacks on the day, any pullbacks on the day, make it to VWAP or here, and then I think they stop. So I think that's about as, like, we would need a collapse in VIX for Qs and SPYs to rally above the pre-market open. The pre-market open is right around 280, or the market open today is right around 280. We would need VIX to collapse down to like 32, 31, maybe even 30 for, Qs to get above 280. So I think these rallies right now are just a little bit of profit taking, a little bit of short covering short term, but I think they're going to be sold. I don't think traders are going to want to be getting long Qs right now going into the FOMC. So 280s is a major level. I probably wouldn't consider, I would consider selling a bear call spread on Qs as well, but after the FOMC. So we have to see where prices are between now and the FOMC. So any questions on Qs before we move forward? 10 for no questions, 5 in the chat. For questions, if there is, post your question. Okay, looks like you guys are good on that. Oh, maybe 10s. Okay, sweet. All right. ARK. So what did we say? Do you guys remember what we said when we said with ARK? We said this corrective pullback is going to break to the downside, and we said it's going back towards this area right here. We're only $1 away from that. What do I think happens with ARK going forward? So we talked about how there could potentially be a snapback rally next week. So we have a lot of options and SPYs that are rolling over, like a lot of options and SPYs that are rolling over. And so we could have a snapback rally on Tuesday. So there's a lot of long puts on SPYs and there's a lot of long calls on VIX. The long puts on SPYs are expiring this Friday. They're going to hold that. They're probably going to hold that through the FOMC and possibly till Friday. If they hold it till Friday, then the options won't come out towards the end of the day on Friday. That means that all those long puts that the market has, remember, traders are long puts, dealers are short puts. Dealers to hedge will be short shares. If traders say, okay, we're closing out our long puts on Fridays, then dealers can unwind their short puts and then unwind their short share hedges by buying shares. So then we get a snapback rally on normally Monday, but as y'all point out, Monday's a holiday, Juneteenth. So then the snapback rally would be on Tuesday. Remember, these types of rallies do not last long. So we would expect it to be maybe a 2-day rally. If we get a snapback rally in ARK in the markets, we expect ARK to make its way back towards 42, 43. If it happens to get to 45, 46, so be it. We'll sell it. The higher it goes, the better it is for us. We're happy to sell ARK. Once we start to see that the snapback rally is stalling out, we'll sell ARK, and then we will target this same low again at 35. But as we have said, what did we say January at the beginning of the year in ARK? We said ARK is going to $35. In January, we said ARK is going to $35. It's hit it twice now in the last month. But we think now if the markets continue lower and the FOMC is bearish, then we suspect ARK is going much lower. How low? We suspect ARK is going towards probably around 25, maybe even 22. But we'd expect around 25. So we want to short ARK. By the way, my trader friend is still short at like 129, like way back up here. I think his trade is now up 600 grand. So he's doing pretty good on that one. We would short ARK in 2 waves if we get a snapback rally. So if we get up to 43, even 45, we would probably look to do a bear put spread on the first leg. So maybe buy puts here and sell puts down here. But for the second leg, we would probably want to go a little bit further on that. And so that would be this, and then we target, say, 25. So we'd sell puts down here. But we might also do a broken wing butterfly to the downside. So yeah, that's kind of what we're thinking on. We layer it. We do 2 different layers of trades. We'd have one for the shorter target and then one for the bigger target. This one probably broken wing butterfly to the downside. So yeah, that's what we're thinking on ARK. Any questions on the ARK trade before we missed ARK on the 5? Yeah. I mean, ARK's been, we said ARK was going to be one of the weaker plays this year. It has continued to be weaker. SPYs hasn't made new. It's just made new. I think it just made new lows. Did it make new lows? Yeah. So SPYs just made new lows today, but ARK has been making new lows for a long time now. Like, it hasn't stopped. Well ahead of SPYs. So it's weaker relative to the market, and we expect that weakness to continue. We haven't quite estimated the exact point that ARK blows up, but we estimate probably around $20 it blows up. It depends on how much inflow is going to ARK. Remember, ARK is an ETF. An ETF, they actually have to hold the underlying holdings in the ETF. So if she has positions in Tesla and Teladoc and all these stocks, Kathy would has to hold the underlying on this. And those underlyings are getting killed. Like, literally everything in her portfolio is in the red on the year. And now I think the current estimates is that if Tesla stayed exactly where it is, because Tesla is the second largest holding in there. If we take Tesla out of the picture, Tesla stays exactly where it is and closes unchanged by the end of the year. Every other stock in the ETF holdings need to rally 405% for her to get back to her high watermark. That's not going to happen. This is not going to happen. And if Tesla continues to weaken, then it further weakens her position as well. So Kathy's in a very vulnerable place. We've said it for a while. She's long a lot of very weak tickers. It's not that the company's done a potential long-term to create these amazing technologies like CRISPR and all this stuff, but the bottom line is the market doesn't want to own it. It doesn't matter what the potential is. Flows is what matters. If the market is selling it, those stocks are going to go down. And everything she's trading right now is going down. So it's, right now she's kind of living or dying by Tesla holding some water. And if Tesla starts to lose ground, then ARK is in trouble. So she has a good sized Tesla position, but I think right now it's her second holding. So, obviously Tesla's weighting her down, but I don't think it's her biggest holding more. Futures is saying, so ARK is just floating on the SPY sea without an anchor. Yeah. Yeah. I mean, it's in trouble. I mean, it's more the Qs. She's long more stuff in the tech than she is in SPYs. Torsten's saying, also when some retail investors want to buy a dip in ARK, she actually has to buy stocks and maybe catch a falling knife. I know. And I don't think she's using a whole lot of options to hedge. So yeah, we estimate probably around 20 is where it implodes. But if she keeps getting a lot of inflows, then she can stay afloat. It's really the inflows that are keeping her afloat. It's not the performance of the stocks. It's the inflows. So she can blow up, but we're not there yet. All right, let's talk Tesla real quick. So Tesla, what did we say last week? That 700 was support, and that held pretty much until Friday. So we had said going into the week that 700 was support, and it held. A couple decent bounces. This is actually a decent bounce, but it was still corrective. It had some short-term legs in it, but overall it was relatively corrective. Then the corrective, impulsive selling begins, right? And now it's lost 700. The way I'm looking at the flows on Tesla now is we're seeing puts, because it didn't have much of a rally, the puts that were at 800 have now started to come down. And they're laddering down. So when we see puts come down, that brings resistance lower. That puts more pressure on the stock. And if the calls are going lower and the puts are going lower, that's both sides is laddering down. That's a bearish signal. So right now, resistance, which was support but last week, is now resistance. 700 is short-term resistance right now in Tesla. Tesla, I think, is like break even on the day. Is it on the day? Yeah, it's right about break even. It's almost there. It's enjoying a little bit of a rally here, but we think any rallies on the day stall around 700. And so if it gets to 700, we may want to short that. The problem with Tesla is I think it only has weekly options. And so we couldn't short it for like a Wednesday or Friday. Yeah, it's only got weekly options on that. So I probably wouldn't want to take anything until after the FOMC. But we think 700 is resistance on the day. So there's a fair amount of options at 700. Moving on to UNG. UNG is holding pretty well. The energy complex is selling off a little bit. Generally, when you have broad liquidations in the markets, if a huge portion of your portfolio is in the red, you're going to want to offset that by selling off some of your trades in the green. Energy has been the hottest sector all year. The only sector I think that is profitable on the year. And so with the market selling off today, I'm not surprised to see energy down a bit. Energy is down a little bit. So we're not surprised that, but UNG seems to be holding its own so far. Like it's not far from the open. It's only about $1 from the open. When I look at the option flows on UNG, I see prior to today, 200,000 calls, 187,000 puts. There's a lot of options on UNG expiring this Friday, like over 2/3. It's huge. That's massive. So I'm seeing support come in around 28, maybe 27. An absolute bear case on the week would be 25, but then that would be a steal. So we have a long UNG position right now. It's currently in the money by a mild amount. We have short calls on it. If UNG starts to get below, say, this little low right over here. So if UNG starts to trend below 27 on the week, then I'll start buying some downside protection. But not until that point. Futures is saying, how did you know puts were laddering down? Do you do a longitude tracking put volume? So yes, so you got to remember my proprietary app, it tracks open interest changes on a day-by-day basis. So I can see where they were yesterday and see where they are today. I can look all the way up to 5 days back. And so that allows me to see, hey, how have the puts been behaving over 5 days? So over the last few sessions in Tesla, puts have been coming down. Yeah. 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 We're not talking about futures though. We're talking about stocks. Yeah. So hopefully that answers your question on that. So yeah, UNG, we're going to continue to hold it right now. Our UNG position, we have the short 35 calls. We should collect full profit on that. We're long at 28.66, so we're a little bit in the money right now. Not much, but a little bit in the money. Remember, this is a 1/3 position size. So we should at this point collect full profit on the calls, and then we'll resell other calls. We're not going to buy puts on this until we get below 27 and change. So yeah. Okay, so we've covered UNG. DBC, kind of the same thing. You know, we're seeing a little bit of some roll off in energy right now, but DBC is holding pretty well. Not much to change in our DBC position. So the DBC position, we're short the 32 calls on that for this Friday. We think we should collect full profit on that. We're long at 27.60. We're still up about $2.15. So we're going to keep holding on that. No need to hedge on DBC for right now. Nothing to do on that one. Moving on, Oxy. So Oxy is struggling a little bit, but we're decently hedged on this. And so we are not going to close the share position until, let me take a look. So where would I want to start closing shares on Oxy? I feel like, or if Oxy loses, because I'm seeing a little bit of option support at 57. If Oxy loses 57, then we'll close the long share position and we'll keep the long put position on that. But we're not there yet. Yeah, we're not there yet. And so we're going to hold Oxy for right now. If it loses 57, then we'll start to close that one out. But not for right now. So we'll keep selling calls on that one. The Oxy position is our worst position in the portfolio right now. You know, we're long at 69.22. So we're down a fair amount on that. But we have some puts right now that are pretty, these should be close to 1 delta puts. And we can keep selling calls against this, which reduces our cost basis. So we can reduce our cost basis. We've already sold one set of calls for 20-something cents. So that reduced our cost basis about down to 69. If these close out for max credit, then our cost basis goes down to 68.5. So the longer Oxy stalls, the better it is for us, because then we can just keep reducing our cost basis down. So yeah, these are the open trades, but we've already been able to reduce the cost basis. And when the more it stalls, the more we can do this. So we'll see on Oxy right now. If it loses 57, then we'll close the long shares. We'll keep the long puts. And let's take a look at our long put position. So what are these right now? These are almost a 70 delta. Yeah, these are almost a 70 delta. So we're not quite at a 1 delta, but we're getting there. So for St. Gamma, yeah, you know, another $2-3, and we're at about an 80-cent delta. Yeah, we're at an 80 delta position at that point. So pretty strong position at that point. But yeah, so we're going to hold on this one for right now. Nothing to adjust on Oxy. XLE, we're in no trade, but we're waiting on XLE. XLE, we kind of have two levels that we're considering on XLE. So XLE, we would like to, let's see here. I want to look at 80. As you can see, I have a couple of alerts over here at 80. 80 would be the first area. And if you see mark 80 here, and look at the 4-hour charts, this level will start to make more sense. So now you can see why 80 is such a strong level. Resistance, a lot of price action there, a lot there. Support on this bounce up. So we're going to keep an eye on 80 as a potential pullback here. We're not ready to get long yet on XLE. We already have some good energy exposure via UNG, DBC, Oxy. So we only enter into one more energy trade if it's a really good price. Otherwise, we have plenty of energy exposure for the rest of the summer, which is what we want. We want oil, we want natural gas, we want commodity exposure through the rest of the summer. So with that being said, we will wait until 80. If it looks good at 80, you know, we feel like the flows are coming in, then we'll buy at 80. Otherwise, below that, if it loses 80, then it could start trekking into this territory. Like we could start trekking into here. And then we'd reevaluate in this area and say, okay, how much further can it go? wait until it stabilizes, then get long. The lower it goes, the better it is for us because we feel like energy is going to be an awesome play for the rest of the summer. We expect drought in California, considering the low snowpack in the Sierra Nevadas. We expect a fair amount of hurricanes this season, which will obviously have an impact upon energy prices in the South. The Russia-Ukraine situation is going to continue to put a lot of pressure on oil and energy and gas. So we want to maintain long energy exposure for quite a bit. Yeah. At least through the summer. So that's pretty much all our tickers. Any questions before we move on to the questions for Chris and student trade ideas? To put a lot of pressure, I'm not sure what that means. Help me out. Sorry, I'm just logging into the live thing online. Okay. Copy that. All right. Let's look at questions for Chris. BTC is red. Yes, it is. We said don't buy. We said don't buy last week. I think futures wanted to buy. We said don't buy. We think Bitcoin's going lower. Jeff says, Chris, late Friday, I purchased long calls on Delta Airlines at 35 strike for September 16th for 386 debit. Do you think I should hold or close these out? Jeff, are you here today right now? I hope so. Yes, no, let me know in the chat if you're here. I know there's like a few second delay, so I just want to see on that. But if you are here, was your intention to hold all the way through expiry? Oh, you are here. Good. Okay, awesome. So, Jeff, were you intending to hold through expiry, or were you just intending to make 50, 100% profit on this and then close it out? So I'm just curious. Meanwhile, just let me know. Meanwhile, I'm going to look on my end. So prior to today, Delta had about 650,000 calls and about 500,000 puts. So a little bit call heavy, which is not surprising considering the retail interest. And so with that being said, about half of the options in Delta Airlines are expiring this Friday. So we expect a little bit of volatility going into Friday and next week. But let's take a look at today. Let's look at the chart and which one can we get rid of? Let's get rid of Tesla for right now. Ooh, okay. You bought these on Friday. Why buy single legs on Friday when you're going to eat Theta over the weekend? That's the first question. Short term. So you're just trading it short term? So Jeff, a question here. Okay, so you're trading this short term, but you bought a September 16th. So remember, when you are if you're trading short term, if you buy longer term options, you're going to pay more for the premium because a September 16th expiry is going to have a lot more time premium built into the option. So you're paying more for that particular call. When you do that, you're generally expecting your profit to actually come from changes in implied volatility, not necessarily the directional delta play. So the upside is you've probably gotten your change of implied volatility. The downside is the stock has moved against you pretty heavy. Yeah. Let's take a look at the flows on the day. So your intention was just to hold this for a little bit and then get out? Was that it? Remember, try and avoid single legs on a Friday because even if it's 3-month out expiry, you're going to eat a fair amount of theta. You're going to eat Friday, Saturday, and Sunday's theta. So always avoid single legs going into a weekend unless you're supremely confident that by Monday you're going to make it all back. Okay, so let's see. You bought these for this expiry. Let's go through your trade. You bought the 35, so it's down to 286. So you're down $1 right now. Your Vega is 7 cents, 2 cents, 46 delta. So Jeff, were you trying to just hold it through the week? Was that the intention? Like you were going to hold it till Friday and then get out of it? Like what's your intention on this? When you say short term, do you mean a few days? Do you mean a few weeks? Help me out so I can understand your trade and then I can fully evaluate it. I want to say something about it, but I want to hear, like, I want to say my recommendation, but I want to hear what your intention was, because then I can really analyze the context of the trade. I'll let you type it all in. Okay, so a few days. Okay, so if you're going to trade something for a few days, Jeff, my recommendation is don't trade options that are so far out in expiry. For example, let's say you thought Delta was going to rally from the current price. Maybe you thought it's going to rally a few dollars, right? Okay, fine. So if you do that and you're buying these options, look at these 35s. They're 10 times less. And so, yeah, you're going to have massive theta decay every single day, but they're 10 times the cost. And so let's just say Delta does rally $3 on the day or buy tomorrow or something like that. You would collect on a $3 rally from the current price, 24 cents per dollar plus 11 cents gamma. So you're getting 35 cents times 3. That's $1.15, I think, or $1.05. You're going to eat 10 cents in theta. So you'd walk away with 95 cents in profit, right? For that same move. Now, if you do this in the September options, yeah, you have a decent delta, but I just don't see, you're overpaying for it. So you paid $3.86 to make 47 cents plus 51 cents times 3, $1.50. So you're paying 10 times as much to make $1.50 in profit, or you can pay 38 cents and make 95 cents in profit. So if you ever want to trade short term, don't pick options that are further out, like that far in expiry. Just take 1 week, 1 month out or something at the most. At the most, because remember, the more you go out in time, the more the time premium is. And so that's my recommendation on that. With that being said, I don't like the current position, and I do see some option support on my end starting around 32. So around 32, dealers are no longer selling, but let me see what the positions are on the day. Yeah, traders are buying a lot of puts. You see right here. They're buying massive amount of puts in comparison to calls. This is mixed. So kind of bearish. Dealers are probably having to hedge and sell. Yeah. Yeah. I would probably just dump this trade instead of eating any more theta. Wait until the FOMC is over and then reevaluate. Yeah. Yeah. That's my thoughts on that. Does that help you out, Jeff? Does that give you something to work with? Like generally when I find myself in a not so good position, I generally, just like to get out of the trade, and then if I'm going to get back into the trade, get back into a trade that I feel really good about, that is a good position, not something that is kind of like out of alignment. He's saying, I understand now. Thank you for explaining. You're welcome, good Seth. You are welcome. Itzig is saying, today is a special topic Monday? I believe it is. Yeah, I believe it is. So I think for our afternoon class, we will cover a special lesson on the day. I'll have to take a look at what that is. Okay, so we've covered the Delta trade for Jeff. And student trade ideas, we have a couple. We have Denny's trade. We have Rusty's trade. And then we have Sean's trade. Okay. All right, so let's get into this one. Long Apple put 130 strike for July 15th. That's the July monthly OPEX for 345 debit. Let's take a look. So Apple's actually gone nowhere. So this is actually favorable. 30 strike July 3. Okay, let's take a look at my end and let's take a look at the options on the day. So prior to today, 3.75 million calls and 3.69 million puts. So barely call dominated, but a lot of options coming off this Friday. And I'm seeing some resistance on my end around, 137 and 135. 135, 130. Yeah, okay. So the higher this goes, the more resistance it starts to encounter. Let's see, who did this trade? Denny, are you here right now, my man? Yes, no? Let's take a look at this. Denny is not here. Denny is eating. Denny is eating at Denny's. Oh, he is here. Denny. Okay, cool. All right. So, all right. If you're going to short this, you're buying a slightly out of the money put. So, and you want to buy for July 15th, the 130. $2. That's $2 more, $2.10 more for an extra $5. Get a slightly higher delta. Okay, let's take a look at this. Let me put it up in the Baghdadi, no. It's there's no point in closing it at this point. You might as well let it ride. So here we are right now. This is the current price. This is that's the strike you're buying it at, and here is your break even at expiry. Didn't it look better last night? I mean, it doesn't look so bad right now, to be honest. Is your intention to hold this through expiry, Denny? Or are you looking to just hold it, say, a week? What's your plan on this, my man? What's your plan on this? Hold through expiry or just hold for, say, like a week? Catch a little bit of sell-off. You're not trading? Yeah, no, I get it. But what's your intention on this trade? Like, if you were to get in the trade, what's your intention? Would you want to hold it through expiry, or would you want to just hold it for a week or something like that? Just learning. Okay, you just want it for a learning experience. Okay. With that being said, considering what we got going on with the FOMC, and this is a single leg, I would say at this point, you would either want to wait for a move back into this corrective structure, like towards the top of this. Like, you don't want to trade in the middle of this corrective structure. You want to hold it short term. Okay, so copy that. All right, so if you just want to hold it short term, I would say if you're going to short it, wait for a pop back up here and maybe get long the 135s. You could get long the 130s then at that point, because if the market goes up, these will be shorter or cheaper. And so if this is acting as intraday resistance, then we don't want to short in the middle of this range. We'd want to wait for a pop up there and then short it. I personally wouldn't want to hold a single leg option right now going into like the FOMC, because we could have some pretty big volatility on Wednesday. I suspect, as we said in the market commentary, that most likely the market stays bearish unless the Fed comes out pretty benign, pretty mild, less hawkish. I think we have bearish pressure through Friday. Then on Tuesday, with all the options coming off the board on Friday, about 25-30% of SPY options coming off, a lot of VIX options coming off, we're going to see a little bit of a snapback rally on Tuesday. So that's what we're expecting on that. But we don't expect that rally to last long. If we get a snapback rally, then SPYs has room to potentially go up to 137, maybe like 140, 139, 140. And then we can reshort it, maybe get long a put on that snapback rally. So I would say if you just want to hold it for a few days up to the FOMC, then wait for your rally, see if you can get a push lower, get a few bucks in it, close it out. That's it. Otherwise, I wouldn't want to hold this going into the FOMC. There's just too much event risk. So if you get that short-term trade opportunity, I'd say take it. Otherwise, wait until after the FOMC, and then let's reevaluate. Does that make sense? Yes, no? Okay, meanwhile, I'm going to get into analyzing this one here. So long meta put spread. Denny says, thank you. Yes, you're welcome, good sir. Long meta put spread. I like your thinking, Rusty. I like getting long, or I like getting short Facebook. I'm still going to call it Facebook. I'm not going to let Zuckerberg get away with this. He wanted to change his name to deflect from the bad press of the app. Nobody cares about the metaverse. Nobody's talking about it. Can't fool me, Zuck. Just because you're on the other side of Lake Tahoe from me doesn't mean you get to BS. So, all right, 175, 155. July 15th. Okay, you might have to readjust because this is already down almost $5 on the day. The way I would do this, let's see. Let's take a look at Facebook. I'll keep calling Facebook. Prior to today, 1.7 million calls, 1 million puts, 30% of the options rolling off this Friday. It's a lot. So the way it's lining up, there's a little bit of pocket of resistance between kind of this 170 to, yeah, like 176, 178 area. There's a little bit of pocket of resistance in there. I like the idea. Monthly view up right there. Short-term price action is pretty bearish. This is weaker than the S&P 500. Like, let's, yeah, you see how S&P 500 is not far from its open and rally quite decently. This is weaker. So Facebook is weaker relative to SPYs. So when we want to short things that are in the SPY, we want to short the things that are weaker than the rest of the SPYs. And so this is a good play on that. I think if you're going to do this, I would say either wait for a pullback into, I would say wait for a pullback into the VWAP, the session VWAP on the day. If it eclipses that, like if it hits this and you feel like it's going to break through, then wait for it to come up to here and then look to get long that put spread. But you may want to adjust your strikes instead of the 175. Maybe you want to do the 170. You know, do I think Facebook has room to make it to 155? Yeah, I think Facebook has room to make it to, I think it would probably stop a little bit at 160. And I think max move by July 15th will be 155. But yeah, I like selling this on pullback. It's weaker relative to SPYs. Very weak corrective bounce here. No volume surge on this. And if we get a breakout to the upside, volume surge is okay. But yeah, I would say wait for a pullback into the session VWAP and then look at some at the monies and then sell some further out of the monies. So I like this trade idea, Rusty. I would readjust the strikes a little bit. Your expiry is fine. I think it's a great play. If you really do want to hold till July 15th, you may want to get like half a position. So like take 1/2 size on the pullback here, get long your puts here, short puts down here, and then leave the other half until after the FOMC. Because if after the FOMC on Tuesday, we get that snapback rally, then you can add a little bit more to your position at a higher up strike. And then you'd have a full position. You'd have a normal full position, but you'd have split strikes. So that would be my recommendation on that. I like the idea, though. I want to be bearish on Facebook. And so we will sell pullbacks on this. I think it's a great trade, Rusty. I'd take this trade. Just with a few adjustments that I would take it. Yeah. So nicely done on that. That's a good trade. All right. We're getting towards the, we've hit the 1 hour mark. So we will save these three for the second class on the day. So we'll examine Sean's trade.
All right, ladies and gents. So that was a quick sneak peek of the option school. If you guys do want to join the school with Chris Capri, I'm going to put the link there in the chat, folks. It's $7 for 7 days. That's your trial period. And then from there, basically, after the 7 days, if you want to keep it, you'll pretty much, if you want to keep it $14.97 for the year, it comes with Benzinga Pro. You guys are already familiar with that. If not, don't worry, it's included for free. So you don't really have to pay, much for any, nothing really. This is included. So again, Benzinga Pro is a great tool, guys. Let me tell you a little bit about Benzinga Pro. There's so many tools there, the charting. As an example, right, you can see I have the RSI here. This is a great tool for whenever a stock is either, oversold. As you can see, this one was a little bit oversold there. It's picking back up. And also you can, put all sorts of different indicators there that you need. Again, this is for charting, right? Keep in mind, we're talking about charting stocks, all that sort of stuff. You have scanners in this stuff. Keep in mind, the main focus here is the school, right? That you have classes every day with Chris Capri. You have 8 different chapters. Your classes are from 11 a.m. till 12, all right, Eastern. And then you meet again for a second class from 2 to 4 p.m. So this means that if you join now, you will be able to attend the 2-hour session that is after this one, right? That one gets a lot more in depth. Chris discusses trade ideas, discusses a whole bunch of stuff, as you can see, but this is pretty much for everybody that's trying to trade options. Maybe you've blown up your account. I don't know, right? Maybe you've had some issues trading options. I'm telling you, the community here is great. The trades are great. The education is amazing. And when you package it together, it just, goes pretty well off. But keep in mind, you have access to all this stuff together. And that means, right? That means that as long as you have the option school, you're going to have Benzinga Pro. Okay. Benzinga Pro is your market research terminal, which basically allows you to trade stocks. Like, for example, this one that I'm trading, MULN Technologies, from what I understand, the CEO said in a prior interview that he's going to announce a Fortune 500 company partner or investor, something like that, for their, I believe it's for their EV battery. And if you can check, you want to check the news right here. It's very simple, right? So they had some interesting news here from what I see. Well, they were added to the Russell 2000 and the Russell 3000 like last week. And the other thing which really, gave the stock a lot of confidence for traders and investors is that they pretty much made there's a place called Indiana Battery Innovation Center. It's a research and development place. So that means that big companies like Duke Energy go there with their Valvoline gas energy companies to test battery, to test electrical grids. So this is where MULN got tested. And this test showed that it's stronger, the battery's better than the prior test they had. So if you can see here, based on the results from the Battery Innovation Center from Indiana, which is where Duke Energy and all these huge corporations do their testing and go to market strategies, right, with the research and development, they found out that it was stronger than previously reported, the volts. And right here below, you see the data supports that solid state polymer battery, when scaled to the vehicle pack level and at 150 kilowatt hour equivalent, can deliver over 600 miles of range on a full charge of MULN EV crossover. So this is out, and I'm going to show you the place there, Battery Innovation Center, so that you can more or less get a look of what this place is, what they do. They're a research and development center. And we can see here a couple of their customers. I'll show you one that's a pretty big one that kind of got me. I think it was Albemarle, I believe, but let's see if it's there, right there. So you see Duke Energy right there. That's Duke Energy, the big company. Microgrid pilot projects, okay? DuPont, anybody knows DuPont? Okay, so you can see this is a company this BIC is a legit place where big companies go and test their data, not their data, but their technology for electrical grids, battery technology, and they're research and development. So that means they're go to market, right? Once you have the research and the development side, you have to go into commercialization, right? Go into market. So that's pretty much, keep in mind, I found this place just by clicking here inside Pro, inside my news thing, right? So I clicked here and it gives you everything that you read on Pro, you're going to see it's reliable, right? You can go in, look at it for yourself. And this is the second test. I know they had a prior test, which is really good. And then there was a short report, and then they put out this other test, which pretty much kind of shut off any accusation that their battery wasn't, worth anything, right? So that was really good for me to see, right? Seeing the fact that they had several tests going and they were, tested by this place, by Battery Innovation Center. And you can see a lot of things here on the sides, like competitors, right? Who are their competitors? Tesla, Toyota Motors, Ford, GM. You can see basic information here as well from them, short percent of the float. See what else we can find here. So institutional ownership, pretty low here. I think this is owned a lot by retail. Like retail owns like the big, like 80, 90% of this from what I think. But You can find all the news there, right? All the news. And if you want to go to the calendar for earnings, dividends, listen to their conference calls, guidance, all that stuff you have there. To be honest, the place I spend the most time is really in the chart. As a trader, I want to be looking at the charts. That's the most important thing for me. Nasky, if you're subscribed in Pro, how do you get access? You got to call me and I'll hook you up with something. I'll put the contact in the chat so you can send me a quick email. That email is definitely the best. Email is definitely the best. Let me put it in there. So, but yeah, I mean, this company, man, I was trading it all the way here, like in March, beginning of March, when the first news came out. Now everybody's waiting on the Fortune 500 announcement. The CEO said it would come before the end of the month. I'm sorry, before the end of Q2, which I think it's the end of the month. So that's really what a lot of traders seem to be waiting for on this one. So keep in mind, it doesn't matter what you're trading. You can always use Benzinga Pro and literally get all your information here. Even if you're scalping, even if you're trading, even if you're, buying options, even if you're doing spreads, it doesn't matter. Like this machine of Benzinga Pro is going to help you do all that stuff. But yeah, for those that are asking there, that's MULN ticker, MULN Automotive. And let me show you here. Wait, that was the other place. That was the research and development place that tested them. This is, all right, this is it. So now really quick, let's get here to the option school, right? I want you to see where everything is for all you guys that signed up. When you have the dashboard, you can pretty much set your schedule here, like see June 14, 15, like you see all the things you have coming up, right? If you want to find all the recordings, if you for any reason can't go to the live class, all you have to do is literally go here, check out all the recordings for every single chapter, right? 3, 4 leg, 2 single leg option strategies, option Greeks, volatility. That's my favorite one, volatility. Combining options with price action, my second favorite. Okay. So I have some classes here that I really love, that I really, I'm always watching the recordings back to back because I'm here with you guys or I'm working, so I can't watch this stuff always, but it's a huge help. And just having the guidance from Chris really helps a lot there, right? So video library, you have that. Then you can come in here and chat. We have. So all the live trading rooms that we have, you're going to see that there is like community support one, general discussions, student trade ideas. So in the student trade ideas, all the students are posting their trade ideas as far as like what they think is gonna, trade ideas, basically, right? Charts they like, questions, things like that. All the students are like, engaging. It's a great community. Then you have questions for Chris, where all the questions are posted. If you have a question, if you cannot attend the live sessions, this is for you. If you cannot attend the live sessions because maybe you have a full-time job, you have to do other stuff, understandable. This is why you have this chat room as well. If you can't attend live, general discussions, community support, class files. So here you're going to get a trade alert every Sunday from Chris. It's 3 every Sunday. And I'll show it to you here in a bit really quick. I just want to see if this thing's still ripping. Looks like it. Okay. So, all right. While that loads, you have this chat room, right? Let me open it. All right. So, options flow report, you can see that he's going to put about 3 tickers there, right? And how to go about them, right? As far as like trading it on the bull side or on the short side. So you get this included. This is a trade alert. It's like $500 by itself, but you get it for free if you do join here with the trial. If not, you don't get it. And you also have quizzes like that, right? And one of the most important chat rooms here I want you to look at is Chris Trade Ideas. This is where you get access to all the trade ideas from Chris, entries, exits, updates, market commentary. I've gotten a lot of good trades from here. And really, I just pop in here and just put my alerts here. We have sound alerts. Whenever you see that yellow bell, you can individually change them or just, put them all. But you can put up your sound alerts there. So we went through where to find the live classes, where to look at your schedule for the week, where to find the recordings, all the live trading chat rooms, and all the resources within the live chat rooms. A little bit of Benzinga Pro. I want to show you something here really cool. I still haven't gotten a heads up on how to use this, but I know that Chris can show you. But basically, it's an options profit calculator. So that as a trader, if you trade options like me, you can look at this and it's going to give you a really good idea, right, of your options profit calculator after 100 trades right there. So really interesting for strategies, things like that. I really recommend to get with Chris on how to use this. And again, this is only available for people in the option school. It's not available if you have pro, you don't have it, you don't get it. Doesn't matter what else. The only users that have access to this tool and to the other ones that we're going to be adding are the Benzinga option school members. So let me check something here really quick, guys. Look at the schedule. See if we have to do here. Okay, I think we're good. So look, we have a little bit of time here, guys. All right, we have a little bit of time here. So in the chat, let me go ahead and check. Do you guys want to watch a quick short recording of one of the classes, or just ask maybe a couple questions? If we do have a couple more minutes here, so I just want to give you guys some time before I don't know, I can see what else we can do. Raymond, how often are the live sessions per week? So it's Monday to Friday. Monday to Thursday, you're meeting from 11 till noon Eastern, and then you meet from 2 to 4 p.m. Eastern. So that is Monday to Thursday, and Friday you're only meeting for 2 hours during the day. So it's every day if you want to look at it that way. It's Monday to Friday. So obviously, you know, whenever the markets are closed, you know, that's one thing, but we're pretty much focused there on trading, on learning about trades. Every trade that Chris Capri puts out comes with a full backdrop of education, which is so great because I think it's a good way to learn, right? Whenever you are learning as you go, I think that's a great way to kind of get your feet wet and at the same time, you know, lose that fear of getting into it because you have that guidance, you have that mentorship, you have that live feedback, live interaction, right? So I think that you guys should give it a shot. It's $7 for 7 days. I don't think there's anything. I mean, that's what a gallon is. What's, you know, like a gallon of gas, a burger, a Starbucks coffee, I don't know, a roll of toilet paper. Like, I don't know what else you could get that will give you more value than joining this amazing community, trading and learning with Chris. Obviously, after the 7 days, that's your trial period, right? If it fits and it's something you like to do, being part of a great community that trades and learns together, you have a 70% off, which is after that 7 days. So it's $14.97 after the 7 days. You only have that price because you are in that trial, you know, like kind of graduating from that trial to that full year annual. So good question, Raymond. If nobody else has questions, I can put a quick little recording here of a lesson from Chris if you guys want. Just let me know in the chat. If not, that's cool. We can, you know, we can just call it a day there. Let me put my info there in the chat. Let me know. See what he was doing. Oxy puts. Okay. All right. Interesting trades there, Chris. Okay, guys. So I put the link there for you guys to check it out. I really think you should give this a shot. I don't know what else you're going to do at $7, honestly. Just be real with yourself. We're trading there. You have trade ideas, education, live classes. And if you have questions, reach out. Thanks a lot, folks, for being here. I hope you have a great day. Stay safe, and we'll see you guys around.